everyone joining us from around the world, whether you're just waking up midway through your trading session or winding down for the night. Welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Scarlett and I'll be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful owners. Welcome, owners.
Thank you so much, Scarlett. Hello everyone, and thanks for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rules, but about the full ecosystem that WeMasterTrade offers. How you start, how you grow, to how you earn. This is the kind of platform that just fun trade, it builds traders.
Absolutely, and next to he is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's reinforced in our trading space. Please welcome Ralph.
Thank you, Scarlett, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just that WeMasterTrade offers, but how traders can truly take advantage of each part of our system. From packages to promotion to steering and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you a full picture, not just the highlight reel. Over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we are doing things differently from traditional brokers or pro firms. Now, I want to be clear, this isn't about sales, this is about understanding. We want you to know what you're signing up for and what kind of structure supports your journey, and how you can use that structure not to just succeed but scale.
And speaking of structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike a broker who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share the profit only when we do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading packages, which we'll be discussing in detail. We plan the highlights behind each one, that kind of trader they design for, and how to structure trend depending on whether you choose the challenge model or instant funding model. So if you ever look at our package and through which one is right for me, today we will answer that.
And more than that, we also do a live comparison between packages. We'll break down pricing, account size, maximum drawdowns, consistency rules, and even payouts side by side to help you make a full informed decision. It's one thing to see numbers on the website, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is on way, how do I stay compliant while trading? So we will move naturally into discussing the trading rules, which honestly is one of the most important parts of today's sessions. We will explain what the daily loss limit is and how it's calculated, why it includes both closed and floating profit and loss, and now how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about the trading sizing and risk per trade policies.
And we're going to explain rules in isolation. We'll explain them in the context of live trading decision. We'll share some personal examples of mistakes I made when I first started trading under funded conditions, and how I adjusted, because rules aren't meant to restrict you, they're there to rotate you integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan. including limited time discount codes, trader support campaigns, and bonus capital opportunities, and how to properly qualify and submit proof. We had some amazing response to our promotions, but also some confusions. So we'll be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful way to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from broad firms. When you trade on funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just percentage. We plan the full payout cycle, ratio, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program, and we'll do it transparently. We walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income stream.
So, as you can tell, this is not just a surface level live stream. We're diving into everything: packages, rules, remote scale-up path, profit sharing, and affiliate opportunities, all with one purpose in mind, helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have any question at any point, please drop it in the chat. Our moderators are watching and will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave a timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about having traders succeed.
So, to wrap up this welcome, I'd like to say this: WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand and take action, you're exactly where you need to be. Let's dive into the journey together. So, thanks again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you a full picture of who WeMasterTrade really is, what we believe in, and what will build this platform the way we have. Because when you're putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so, in this next segment, which is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined, as always, by two people who live and breathe these principles. Owners and Ralph, let's start at the beginning.
Thanks, Scarlett. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many broad firms or brokers that evolve from traditional financial situations, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, location, or financial situation. We were founded in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada, while WeCopyTrade built named on Signal Sharing Investor Network and Copy Trading Tech. WeMasterTrade were designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their savings.
And it's important to note that WeMasterTrade is now a broker. That's not just a label, it's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We tackle the capital risk, we give you the roadmap, and you bring the skills. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure, and that's why we have invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
Now, about the academy, is something special with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We designed a curriculum to match the real-world trading environment within WeMasterTrade, so what you learn you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certification is a big deal because it's our long-term commitment to developing traders, not just collecting fees in an industry where many call it reform come and go. WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a session, we're here to help build careers.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without an emotional burden of risking personal funds. We have we have had students become full-time traders. We had women re-enter the finance world after career breaks, and we had young professionals from other bank regions finally access the market with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where our team of experts and educators share weekly insights, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you'll see that we actually listen.
And I'll speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is a product. Your performance drives the business, your voice sets the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funding accounts, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
So to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We're here to challenge the status quo of trading assets, to build systems that reward performance over promotion, and to create dual scalable income opportunities for traders around the world, regardless of their starting point. So this is more than a platform, it's a trading movement, and if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you owners and Ralph for that deep and honest walkthrough. Coming up next, we're going to take these foundations and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they're designed for, and what kind of results you can expect from each. Now that we explore who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they structure, and most importantly, who they're designed for.
Exactly, Scarlett. At WeMasterTrade, we don't believe in one-size-fits-all model. That's why we build two distinct product lines for traders: the trailing package and the instant funding package. Each line includes a variety of account size and configuration because we know that traders come with different strengths, risk appetite, and timeline.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. Its structures, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulate account and you go to meet specific profit target while staying within restrict but reasonable risk parameters. There are 3 stages in total: phase 1, phase 2, and then the funded stage.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, we need to achieve an 80% profit target, which is 800 without reaching a 5% daily loss or 10% over the loss limit. You have a limited time to achieve this. That's the key difference from many platforms. We don't pressure you with deadline.
And once you have passed phase 1, you will move to phase 2, where your profit target drops to 6%, that's $600. The risk really remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where you trade with real capital, have no profit target, and your profit sharing to up to 90%. That's one of highest in the industry.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you are still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect bucket to begin with.
Now, for those who are confident in their strategies and want to start with a larger account size, we offer $25,000, $50,000, and $100,000 challenge packages. The structure is similar to phases, the same 5% daily and 10% total loss limits, but the profit target scale proportionally.
For example, in the $50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
And the 25,000 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you have already passed all the above challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee, for example, just $45 for the $10,000 package. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you're eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want access to real capital immediately and can pay purely on results? That's where our instant funding package come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced, disciplined traders a chance to trade real capital from day one. No evaluation, no demo stages, just pure live trading backed by a structured, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today, we're going to walk you through each of the 5 main instant funding packages: standard, 51010, 510 euro, 51010 Novice, and customized. We'll compare the details, but more importantly, we'll help you figure out which package is right for you.
So let me set the scenes quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, includes no top limits, up to 90% profit share, balance-based limit, scalp length toward $1 million, support for EA swing trades, scalping, and even HFT. Now let's go package by package, and as we go, owners and Ralph, I want you to jump in with a real advice. Who should actually choose which one, and what kind of traders you've seen succeed with each?
Let's start with standard package. I always describe this one as the best friend for traders who just want stability. You're getting up to 200,000 in capital, with very manageable 4% daily loss limit and 6% overall loss limit.
It's like that camp steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about commissions?
Competitive across the board. Forex at 4% loss per loss, gold at 4% loss, index at 1 stock at just 0.2, 0.7 per loss.
And everything is allowed: news trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly and sustain your strategy, wants a full range of assets and plan to play a long game, this is your sweet spot.
So it's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it suits swing trader. The 4 to 6% risk profile gives just enough flexibility to hold multiple positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about a 510 package. Same capital ceiling up to $200,000, but you now get 5% daily loss and a wider 10% overall limit. Why does that matter?
That execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window. Plus, you still get full support for scalping, EA, new trading. It's very trader friendly.
This is best for day trader, especially for those trading assets like NASDAQ or gold that move fast. If you have got a tested intraday strategy and just need some risk freedom, this is your package.
And also for traders who want structure but don't mind having that profit target. The clear milestone motivates some people, especially if their payout oriented.
Now here's a personal favorite, the 510-0. You get 5% daily and 10% overall loss, but no profit target, none, zero.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
And now for the rule breakers, or rather those who don't want to be evaluated on how even the profits are. The 5-10-10 no BC removes profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you are not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copier are not allowed in this one, so it's for manual trader only, and you need to trade responsibly. But for aggressive trader who sometimes hit big spike, this is play.
So, is it perfect for high risk, high reward traders or anyone who had issue with consistency rule at other firms? You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss overall loss to your liking, but look, you can fund up to 400,000 or more than any other account.
It's premium, flexible and comes with all trading style around, including EAs, nail trading, weekend holding, HFT and more. So this is best for top tier professionals as hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say if you try other model and nothing quite fits, build your own blueprint with customized that freedom is rare.
To sum up, every instant funding package we offer comes with a clear risk parameters, fair commissions, deep market access, and real profit potentials. There are no time limits, and payouts start as early as 1 day.
And no matter your strategy, scalping, swing, ego, and manual, there's an account that's aligned with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your trips. The right fit always outperforms the biggest promise.
Up next, we'll walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rules that power our entire platform. Alright, now you have seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yes, the traded daily loss is the one rule trader thinks they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works really good, it's become one of the best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you're allowed incur in both floating and closed trade on any single trading days. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what keeps a lot of people up.
So let's walk through a live example. Imagine it's the start of day 5, your balance is $105,000, your equity however is higher, $107,000 because of open floating profit.
If you're on a 4% daily loss limit, we calculate it of the higher number, 107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of the day can't drop below 102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the stop day is 7, your balance is 100,000, but your equity is 99,000 because your open trades are slightly in loss.
Since the balance is higher, we base the 4% on initial balance, so 4,000.
So now your equity must stay above $96,000 throughout the day. If it drops to $95,999, auto liquidation cases, no warning, no margin call.
The system will send a market order to close on trades. Everything liquidates, your account is disabled, and you can't trade again unless you purchase a new package.
And here the kicker, the auto close happens when the system detects the result was closed. But due to market fluctuation, your final profit and loss might look worse than the actual result. That's because the system executes the closer based on price limit at the time of liquidation.
So even if you only intended to take 3,900 loss, one slip may spike in gold or Nasdaq and suddenly is $4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the bro mindset kicks in.
First tip, know your buffer. Never plan to take you right up to the edge of your limit. Leave at least 10 to 15% room below the mark loss, especially in volatile market.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading toward violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboards that show your live loss status. Use them, check them, don't rely on memory.
Also, pause trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to reverse trade your way back up.
Another big one, trade smaller during those hours. If you are trading gold during NLP with put loss sign, you are practically begging to break the daily loss rule, cut position size and ride past volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1, over leveraging trader opening position that are 5, 6, 7% of their account, thinking they will close quickly, but if the trade turns red fast, it's ready too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 big gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matter, you're not. Remember, equity includes both floating and closed position. The total equity line is your score.
I always say this to new traders. The daily loss rule is not your enemy, it's your account error. It is designed to protect you from doing something irreversible.
Exactly, it's positive discipline. You can be aggressive, but only within the box. And if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, this isn't about the rules, it's about trust. WeMasterTrade funds you because we trust that you manage risk responsibly. The daily loss is there to protect that trust on both sides. And next up, we will have a little break before we jump into the next segment. back, traders. In the previous session, when we covered the daily loss rule, and if you haven't already clicked that one, you're missing out. But now we move from the daily boundary to the absolute boundary. I was talking about the maximum loss rule, also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is the max loss rule? Let's define it simply. Is the total maximum amount you're allowed to lose across all trades for the entire account. If your equity, that is, your real-time capital including open trades, ever drops below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next. And if your total loss across the line, that's it.
And the percentage limit depends on your package. It's typically either 6% of or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
So let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max lot limit is 6%, which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday. The total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you have lost 2,000 in closed trade and you have another 1,200 floating in red, your equity is now at 46,800. That's below the limit. Account closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equities stand in real time related to that stop loss fall.
Here, where it gets interesting and a little tricky, let's say your account grew to 5,100. Congrats, you're in profit.
But your max loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fund before you hit it.
Exactly, you now have $4,000 in total buffer because $51,000 minus $47,000 equals to $4,000. So your profits give you cushions, but the floor never moves.
Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidations triggers on trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's your execution reality.
And most importantly, once it's breached, that account is permanently disabled. You'll need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close loss every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profit as protection, not permissions. Don't treat floating profit as a green line to increase risk. Instead, consider locking gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
Fourth, stay cool when you close. If you're down 5% out of your 6% limit, this is not the time to double down. That's the time to step away, pause, and retain your entry.
The biggest mistake, underestimating floating drawdown. Trader close 3 loser and thinks, okay, I still got room. But they forget about the 4 trade 14 minus 1800.
Second, traders who trade recovery after a bad day, they lose 4% in one day, come back swinging the next day thinking, well, they make it back, and instead take another 2%, boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, news candles can get you straight through your limits.
The McLaughlin rule is there for a reason. It's not there to punish you, there it protect you from yourself. Every successful trader I know see their stop loss whether personal or institutional at a non-negotiable boundary.
Right, it's a reality check. If you're consistently pushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we're not just giving capital, we're teaching structure. And the max loss rule is what separates gambler from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both close and floating losses, and once breached, your account is gone. Coming up next, we'll explore the consistency rule and why steady profit matters more than a big spike when it comes to growing, scaling, and getting paid.
If you have ever made $5,000 in one day, then made $200 in the next 4 days, and wonder why your payout got flat, this next section is for you.
Let's try into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we talk about the daily loss limit and we'll just cover the maximum loss limit, two pillars of protecting your capital, but now it's time to shift gears just a little and talk not about risk but about results, because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day, you need something called profit consistency.
This rule right here, the profit consistency rule, is what separates the low-key spike from the reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio, the less consistent, meaning you have one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that looks at risk. What we want to see is who trader who make profit trader after day, even if it's small. That's what we can scale.
How is it calculated? The formula actually is really straightforward. Take your best trading day's profits and divide by your overall profit since you started the account, then multiply by 100.
So best day divided to the total profit and multiply to 100 equal to the profit consistency ratio.
And just to be clear, best day refers to your highest close profits in a single calendar day, and total profit in the sum of all your close profits minus any close losses or open losses across the line of the account.
So let's say you've had the following results over 5 trading days. Day 1, $100, day 2, $200, day 3, minus $50, $100 in day 4, and $60 in day 5.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 4100.
And your best day was day 2, that $200 profit.
So now we apply the formula to 100 divided by 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
And so even though this trader is profitable, they're not consistent enough. They have one big day that made up almost half of their total profit. That's not sustainable. That's what we're looking at.
And this is where I really want to speak to traders. If you're relying on one or two big days to carry on your entire account, that's not personal trading, that's very lazy. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance and are the ones who get scale up, who get richer, who get trusted with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So let's say you are over the limit. Don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here, how to do that. Trade smaller size for a few days. Trade smaller controlled with for $200, $300 days. Avoid big swing trader that could spike your ratio again. Spread profit across multiple days, not one monster setup.
And for those using EA, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
So there is some common mistake to avoid. Mistake number 1, traders hitting target early, then taking the rest of the week off. That inflate your best day and leave the rest of your curve flat.
Mistake 2, over trading after a big day, thinking I'm safe now, and trying to reach squeezing more instead of averaging out that high ratio.
Mistake 3, thinking this rule is just a hurdle. It's not, it's a reflection of what we actually look for in our master traders.
And the end of the day, it isn't about controlling you, it's about building habits that can handle scale. If you can be consistent with 25,000, what happened when we give you $100,000 or more?
Exactly, consistency is what made you safe to invest in. At WeMasterTrade with fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and grow into six-figure funded accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you have got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your strategic tab.
So to recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We walk through the daily loss limit, tackle the maximum account loss, and examine how your profit consistency shapes your long-term payouts and growth. And now we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy in the market, but truthfully, it's inconsistent, especially in how much your risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade ideas, both closed losses and floating losses, even fees, commissions, and swap accounted. And for some accounts like the 510 OBC bucket, this rule gets even stricter. There the limit is 1% per trade idea, not 2%.
And why does this matter? Because consistency isn't just about the outcome, it's about the process. The more aggressive your position sizing is, the more volatile your equity curve becomes, and that makes you hard to scale.
This rule will take both you and the firm. It helps reserve capital, prevent large equity swing, and make sure your edge plays out over time.
Think of it as your account hits her speed. If your position size closes up and down, 0.5 loss one day, 5 loss the next, and the system flag it. That's not structure, that's chaos.
This is where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that share the same logic.
Entry by position on go at different time, and you can close them within. That's one trade idea.
You can see the same symbol, same direction, and close around the same time. Even if you open them at different times, they are seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rule across the entire bundle.
You can have multiple celebrate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP/GBY, and short on AUD/USD, and each position has its own distinct direction and accept. Those are three separate trade ideas, and each one can raise up to 2%.
And what not allowed? Let's say you go buy on gold and then you go buy it again and again. You now have three open positions in the same direction on the same asset.
Yep, the system treats that as one trade idea, so if you combine floating risk or eventual loss from those positions is 2% of your starting balance, boom, you have broken the rule.
And another mistake, opening multiple goals by then closing 10 minutes later, and two orders together. The system still will group trade close within 3 minutes of each other. So be mindful of your close timing.
Let's go hands-on. Suppose you have a $100,000 account. The 2% max risk per trade idea means you can't lose more than $2,000 on any trade idea total.
So you open two goals by one loss each. You don't play the stop loss, new hit, market drop 100 bits. Each loss at 100, that's 200, 2,000 total.
You're right on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken, account flat or liquidated depending on the enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this risk may result in loss funded status on immediate closure.
So some pro tips to stay risk consistent. Tip 1. Set your loss size based on your account risk, not emotion. Know how many bits equal 2%.
Tip 2. Use stop loss order. Set them based on risk per trade idea, not random chart level.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean three of them are.
Tip 4. Label your trade ideas mentally. If you are entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart, scale in smaller. You micro loss if you need it, and keep the total exposure below 2%.
So the most common reason traders break this rule, stacking multiple entries on one trade idea thinking it's still separate.
Second, opening high risk trade after wins, assuming they playing with how money, spoiler the market doesn't count.
Third, neglecting floating loss. A trade may not be closed, but the floating red still counts toward the 2% risk.
Listen, just policy, teachers, professional, practice, hedge fund allow it, follow it, bank follow it, real trader follow it.
Exactly, we are not here to micromanage you, we are here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule who understand that small consistent risk is the foundation of scalable capital. Those are the ones we grow. Those are the traders who go from $20,000 to $1 million.
And if you want to be a professional trader, you have to think like one. And professional trader always know how much they risking on every trade every day.
And if you are still guessing your lot size or opening trades because the setup feels right, take this as your sign, set it up, get structure.
This is more than a rule, it's a habit. Build it now, the path go bigger capital and larger payouts become way more predictable. And that, my friend, graphs out the 4 essential rules of trading as WeMasterTrade. It loss, maximum loss, profit consistency, risk consistency, masterpiece. And you're not just staying compliant, you're building a foundation for serious capital management, long-term payout and scaling. And if you're watching the official WeMasterTrade live stream, and the best is still to come. Alright, we make through the risk, through the profit conditions and the structure of our accounts. So now let's talk about why is all worth it, because at the end of the day, we know that every trader really wants.
More capital, more room to trade, big loss, high reward, without ever putting your own money at risk.
And that's exactly what the WeMasterTrade scale plan is built to provide. This is your roadmap from being a small account trader to managing a 1 million funding account, and it's not fantasy, it's a clear path with defined milestones.
And the startup plan is our performance-based growth program. As you trade well, meaning you hit your target, avoid violations, and demonstrate risk control, we increase your capital allocation. In other words, you can earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription model or gimmick. You don't pay for scale up, you earn it through consistency, profit, and big keep line.
And the scaling is aggressive. We are talking doubling, tripling, and eventually scaling you all the way to 1 million funding capital, depending on where you start.
And at WeMasterTrade, we offer 2 types of scale plans, depending on your account type, percentage-based scaling and amount-based scaling.
Let's start with the percentage plan base plan. You begin at Evolution Trader Level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you're promoted to Level 2, where your capital increased by 50%.
So from there, the growth explodes. Level 3, 300%, level 4, 600%, level 5, 1,200%, level 6, 2,400%, and finally, maximum balance $1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles, so the system knows you are not just performing, you're stable.
Now, for instance, funding account, the scale up work with set dollar target, and the plan adjusts depending on your initial funding size.
Let's take the 10,000 funding trader as an example. Here's our level group. 10,000 at level 1, 15,000 at level 2, 30,000 at level 3. At level 4 is 60,000, 120,000 at level 5, 240,000 at level 6, 480,000 at level 7, and at level 8 is 960,000. Finally, at level 9, $1 million.
Each step has its own profit target, usually 10 to 20%, and some levels require profit consistency, especially in the early stages. Once you're beyond level 3 or level 4, the consistent requirement drops and it becomes all about raw performance and discipline.
If you start with a 25,000 account, your first profit target is $5,000 hit that with consistency, you pump up to 37 and 500, then 17 5,000, then 105,000, all the way up to 1 million.
And don't worry, you don't lose your account if you don't hit the target class. There are no time limits, you grow at your own pace, as long as you stay within the rules.
So to move to the next level, here's what you need to do. Reach the specified profit target, avoid all violations, especially month loss or daily loss, complete at least 2 successful payouts, maintain profit consistency if required for that stage.
And when no conditions are met, we issue that personalized trading agreement and upgrade your account size.
And the best part, with a bigger account, you are earning more without increasing your risk per trade. That's real capital leverage. So let me be real for a second. The most common mistake, overtrading to force the target. Traders push too hard trying to scale fast and end up violating drawdown.
And another one, ignoring consistency in the early level. If you make 80% of your profit in one day, that payout won't qualify. You need to spread your win.
And of course, not blaming your growth, you should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7.
Scaling isn't just financial, it's mental. Every level brings more capital, but also more responsibility. If you start trading 10,000, how you will handle 300,000?
Exactly, that's why the scale up is step by step. We test your psychology, your discipline, your patience long before we hand you 7-figure capital.
And that's what makes it real funding. Not demo hype, not a gimmick, it's a structured capital ladder to real traders.
So if you're wondering whether it's worth staying consistent, passing challenge, and staying passionately, this is your answer. From 10,000 to 1 million is possible, and it's been done repeatedly by WeMasterTrade trader.
It starts with one rule following, profit making, discipline month, then we grow it.
So take your time, learn the structure, respect the rules, because here at WeMasterTrade, when we say we scale performance, we mean it. And with that, we wrap up the full walkthrough of WeMasterTrade funding system from account setup to risk management to scale up. Whether you're starting with $10,000 or $200,000, the road to 1 million is real. Coming up with our final statement, and we'll talk about the news calendar.
You earn it. Now let's talk about how to get it.
So hey everyone, welcome to another Macro Bus edition of Market Cruise Live. It's Thursday, July 24, and the markets are closing with PMI data, central bank decision, and retail surprises. For the first event, the Eurozone PMI stability before the ECB from 2:15 to 3 p.m. French and German fast PMIs. The French manufacturing, French services, German manufacturing, German services. At 3 p.m. Eurozone flash PMI, manufacturing and services. So let's start in Europe. Not much firepower here. PMIs came in roughly in line, with a slight upside for manufacturing and stability in services. So this keeps the ECB in a strict key box. They are not seeing a collapse, but growth is fragile. It makes today's rate decision even more delicate. The next event is United Kingdom stability in services at 3:30 p.m. UK flash PMI. The manufacturing figure is 47.9 unchanged, while the services which is 42.8 hit versus 52.5. So it reflects the UK post-Brexit economy split. The services sector, especially finance and professional services, are still pulling the way. POA will likely focus on inflation and wages next week. Next event is the ECB policies on hold for now. At 7:15 p.m., ECB rate and statement. The main refinancing rate, which is 2.15%, and at 7:45 p.m. the ECB press conference. As expected, ECB keep rate steady at 2.55%, but the market wasn't looking for rate movement, it was looking for forward guidance. The Euro USD hovered after the event. If the US job market feels cooling and Euro avoids recession, we might see a base forming near 1.09. The next event is the Canada surprise downside in retail at 7:30 p.m. The core retail sale is minus 0.2% versus the prior minus 0.3%, while the retail sale is minus 0.9% versus the prior 0.3%. The Canada drew in a surprise today. Retail sales came down 0.9%, a full reversal from last month 0.3% gain. That's not good for CAD bond. And it shows consumers are pulling back, and with CBIs already pulling the BOC may pause longer. USD CAD spike after this data was 1.375 resistant closely. For the United States event, the jobless tick up, PMI stable. The US jobless claim rose slightly to 227,000, but still within healthy bound. The real story is that services PMI rose to 53, showing strong activity in the dominant US sector. And it's a sign that despite rate pressure, the US economy is not breaking. Also, new home sales came in strong at 649,000, confirming resilience in housing. So that's it for us today on Market Pulse Live. Don't forget to like, share, and subscribe for more macro coverage.
Thank you again for rep and owners, and that's wrap up our today live stream session, and hope we'll see you in the next stream.